But you can make some bread pudding with that raisin bread. That would be. Bam!
Yep, I can see that being.
You'd be like, oh yeah. That would be delicious. And that API address is right here. Told you the doctor said he didn't want to drive down the anesthesia.
Yeah, you did tell me. So funny. Oh, so funny. I forgot to laugh. Kind of how it works, right?
You don't think it's funny?
Real funny. It's funny, I'm telling you.
You make everybody mad.
This just make my back hurt. I got a few days before we can play, so I'll be okay. LeBron's reaction to finding out that he played against 7 players that were born after his NBA dispute. Nine are from the 9 from the Lakers and Jazz. Mm-hmm.
So fast. It's so good. And you're not full afterwards. Another one. First one was what nachos. I was going to come home with one of these.
That's what it was. She had only knew.
should set a timer.
Yeah, that's what you should do. Timer, I tell you, it's exactly what you need. Isn't I'm wrong? No, you should do 11:30. That to be sure. Women are always doing that to the. I'm taking it right up to the end.
Sometimes I get my water kind of slow. Oh, did you get the note from Amy?
Amy.
Or from the TV person?
Oh, I seen what they had.
Said we're gonna have maintenance on Friday, November 21st.
Yeah.
10 a.m. to 12. Make sure that all pets are properly handled.
Mm-hmm.
Trump signs bill to release Epstein documents.
Oh, well.
They're probably right. Because it's where all the Republicans' names out, huh?
Mm-hmm.
More than one muscle. Say one muscle is this. More than one.
If you've got 5.
Let me see it. Ashley. Ashley. Ashley.
10K, or even 20K sitting in your account right now, and you're looking for something smarter than stocks, less sketchy than crypto, and way more predictable than starting a business from scratch. Listen up. We run a rental arbitrage business that makes over 200K per month, and we don't own a single property. No mortgage, no down payment, no flipping homes, no buying buildings. We don't even talk to realtors. We rent apartments from landlords, furnish them, list them on platforms like Airbnb, and pocket $1,500 to $2,000 in profit per unit every single month. The best part is this only takes about 30 minutes a day to manage. I'm not glued to my phone. I'm not running around with keys. We've got 62 units and a system that runs it all pretty much on autopilot, and now we're showing others how to do it. Over 300 students have used this to start or scale their own cash flow business. Like Shantae, she was a nurse, started part-time, made her first unit profitable, hit 6 figures in 4 months. Richie is teaching this in his upcoming masterclass, where he's walking you through the process step.
I've seen sober living homes outperform 10-unit apartment buildings. Let me explain. In multifamily, every unit has its own kitchen, bathrooms, HVAC system. It's expensive to maintain, and the rent per door capped. In sober living, you have one home, shared rooms, shared utilities, shared kitchen, 9 residents, each paying roughly $800 a month. That's $7,200 a month gross on a single family home, all while making a difference. Lower overhead, higher density, and most of the time, the rent's covered by third-party programs. It's simpler, it's more protected, and it's scalable. Click below to see the numbers. I'll break it down step by step and show you how to start your first sober living home that cash flows like this. I've seen sober. The only problem you will run into is too many leads. We did get flooded with leads. My phone has been running off the hook, and I've only been a member here for maybe 2 or 3 weeks. Lead flow is going to be the least of your problems. Created by our is revolutionizing real estate market. I can't see myself moving forward without it. And nowhere near the success in about 3 or 4 weeks. There's nothing like creative out the guys. This is the easiest $30,000 I make, and nobody's happier to see this in my life. To start watching this struggle and fixing flips, I feel like I'm part of a good team.
A man who understands your pain.
Yep, I know the feeling. At least you don't cover up. You do have your pillow.
The only problem you will run into is too many leads. We did get flooded with leads. My phone has been running.
Like the design of this house.
Where is that at?
Give us 14 days and we'll build you a proven, done-for-you system to scale your real estate business, or you don't pay a dime. This is for real estate investors and wholesalers who are already doing deals and want to scale without having to hire. Laying off the hook, and I've only been a member here for maybe 2 or 3. The hell you calling me to the car like that for? What's going on? Because, baby, this guy, he sat up there and grabbed my booty. What? He grabbed my booty. Who grabbed? Who? Yeah, a random dude. Man, tell me where you were. I was up at the car. I was sitting up there running, and I literally grabbed my booty. I was praying for this damn nigga play with me. Man, take me up here, man. I'm gonna beat this nigga ass. Come on. Fucking seatbelt. I can't get to the nigga fast enough, man.
Mine.
He grabbed my booty like this. Yeah. Like this. I was sitting up there jogging and stuff, and he
sit up there and grab my booty. He
Sit
came
up
from
there.
behind me, grabbed my booty, and ran real fast.
Beat this nigga.
Come on, babe. Come on, babe. You whoop his butt. Come on, you whoop his ass. Hey, that's what I'm talking about. You okay, babe? You did good. You did good.
Why you turned in with Cisco driver and go to the club fighter?
Really, I didn't know that, man. I don't know. People that came up to me random.
Man, let's go, man. If I pull my ass back out the car, man.
Hey, you.
Okay, how do you play? Take it back. You want to grab a handful, leave it. Okay, take care now. Take it out of the way.
How do you exit the LeBron business without offending Rich Paul, LeBron James, his legacy?
I think you are accelerating a process that's going to come to a natural conclusion. But the idea that adding LeBron James to any team in the league somehow could be bad. LeBron, who last year was somewhere from the 6th to the 9th best player in the whole sport, and we saw him last year, as soon as Luka got there, he played off the ball more and was excellent. So I think this year, this fit will work. Now, are they good enough to beat the Thunder? Probably not. Is anybody? Probably not.
How do you exit the LeBron business without offending Rich Paul, LeBron James, his legacy?
I think you are accelerating a process that's going to come to a natural conclusion. But the idea that adding LeBron James to any team in the league.
The only problem you will run into is
I knew I'd run into you sooner or later. Been seeing your pictures in my husband's phone. I don't know what you're talking about. You're the one that's been dropping the burnt cookies and those pitiful burnt pies right on my porch. Next time, have enough balls to ring the bell. I knew I'd run into you sooner or later. Been seeing your pictures in my husband's.
what are you doing? I never got along with you. What are you doing?
I'm just hanging out.
At the truck stop?
Alright, I'm just hanging out.
What are you doing about the day on the truck stop?
We don't know.
You know where I want to go. I'm hungry. There ain't no money.
I got some money. I got some money.
Well, how much that money? You got money before? Tyler.
It's too late. I've already got cancer. It's already spread all through my bones, and had one in my lung, and my liver enzymes were sky high. And he said, "No, it's not too late. By changing your diet now, you're immediately empowering your immune system to fight the remaining. We remove the host tumor cells in the tumor itself, and now your body's immune system is now more powerful. It can start cleaning up the rest of it." And sure enough, I had extreme bone pain. I mean, 2 o'clock in the morning, I had been given pills because of the pain, narcotics, and they didn't touch the pain. I would walk and just almost in tears. The pain was so bad. And within 2 weeks, that bone pain was disappearing. And the bone scans showed that the hot spots were disappearing. My liver enzymes normalized within 2 weeks. The tumor in my lung, just like the little sand that the body had encapsulated those sand grains, did the same thing with that tumor in my lung.
Good afternoon. Thank you all for joining us today. My name is Jeff Wiresinger, and I'm the managing member. I am the managing member of Pelican Capital Funding. We've had the privilege in the last 5 years Lafayette, Louisiana. Did you text your dean today and tell her she's too old to be out there partying like she was? That's a shame. Didn't tell her. Good afternoon. Thank you all for joining us today. My name is Jeff Wiresinger. I'm the managing member of Pelican Capital Funding Solutions here in Lafayette, Louisiana. For the past 5 years, I've had the privilege of working with experienced, savvy investors and providing them with funding from private lenders, and also helping small business owners, help them unlock capital so that they can reach the goals that they have for themselves and their families. Even when their traditional banking would say no, we simply find a way to make that work. Today, I'm excited to share with you one of the most powerful ways tools in the real estate investment toolkit, private lending. Whether you're looking to close immediately or access cash for non-traditional property, simply need more flexibility in your conventional financing, allows this webinar is designed to give you the knowledge and confidence to leverage private capital strategy. So let's dive right in. Okay, here we go. Before we get into any specifics, we want to address some fundamental challenges that many of you face. Traditional banking, it's slow, it's rigid, it's designed cookie cutter properties and borrowers who fit neatly into their airtight underwriting. Sometimes you need capital yesterday. So I want to go over some uh, things that we'll be talking about in today's agenda: the private lending advantages, key benefits for real estate investors, understanding deal structure, mitigating risk, due diligence essentials, finding and vetting lenders, and giving you an action plan to go by at the end of the day. The beauty of private lending that it is flexible, it's fast, and it's asset-based lending, and sometimes your experience is more of a factor than your credit score or your debt to income ratios. So today we're going to get into a roadmap. Over the next 30 minutes, we're going to go over 6 key features. First, we're going to explore the private lending advantages, why it's faster, more flexible, accessible than you may think. Second, we'll look at real world use cases when private lending makes sense. We'll go over rates so you can understand exactly where what you're paying for, and understand when it's the best time to use it, when to get the loan uh, terms verification. Fourth, we examine how lenders structure deals. Fourth, we'll examine how lenders structure deals. Then fifth, we understand their perception, understand how they look at deals to make them safer for themselves as well as the lender. So the better you understand the structure, the more you'll see where it fits. And fifth, we address the elephant in the room, risk and how to mitigate those risks. And finally, we'll talk about finding and vetting lenders and take an action plan that you can implement immediately at the end of this seminar. That way you have a clear roadmap for leveraging private capital. So now what we're going to get into is some of the benefits and flexibilities of private lending. There's 3 primarily real world scenarios. Imagine you find the perfect fix and flip opportunity. The numbers work, the property is solid, but there's the catch. The seller needs to close in 2 weeks, and your bank underwriting process takes 45 days. By the time they approve the loan, the deal is gone. This is where private lending shine, and there are 3 core reasons why. Advantage number 1 is speed. Private loans close in days, not weeks or months. We're talking about a process that could uh, bound by the same quick underwriting qualities. The speed is absolutely critical for time-sensitive deals like foreclosure, like auctions, like distressed properties, or competitive bidding situations where fast offers win. Second benefit is flexibility. With a bank, you get their terms, take it or leave it. With private lending, the terms are negotiable. You want interest only payments schedule? That's aligned with your property projected timeline. That's negotiable. Private lenders are willing to structure creative deals because they understand real estate investing. They're not bound by some cookie cutter lending properties. This is flexibility as invaluable as when you have a non standard structure deal. Advantage number 3, fewer barriers. Qualifying for primarily based on asset values, investors' experience, not just personal scores, strict debt to income ratios, and more exclusive lending criteria. They're focused on the asset and tracking your track record. So that's what put them in a very good position to offer you money. Your credit scores matter, but not as much as your experience and the profitability of the project that you're working on, the deal itself. So now you understand why private lending is so powerful. Let's talk about when you should actually use private lending. There are some real world situations that we want to look at. Private lending is in every situation. It's not good in every situation, but it's best used for the right job. Kind of like any tool. If you got the right tool for the right job. So here are some ideal situations where private lending is just ideal for what you want to do. Here we got four cases here. One of them is a fix and flip property. You're buying a distressed property, you're renovating and selling it. There you have about a 6 to 18 month. Private lenders, they like these kind of deals for the very reason that they can see their timeline, they can see your exit strategy, and they understand when they're going to be getting their money back. They love these types of deals. The speed of a private is perfect for flipping because you can get in, you can get out, you can have all the items that you need, and you get a quick start. You do your renovation, you get the property back on the market, and you move it fast. Time, money, and flipping and private lending saves you time. Case number two, bridge lending. Second, let's say you found your next investment property, but you haven't sold your current one yet. You need capital to bridge the gap, hence the name. Between the purchase and the selling of a private bridge loan can close in days. Once you have that property sold, you can pay off that loan with no mitigating steps. So it takes that time and turns it to your benefit. Third case would be non-traditional property. Loans for properties that don't meet conventional lending standards, such as properties in despair, unique commercial assets, or specifically used assets, like say a McDonald's restaurant, cleaners, car lots. Those kind of are definitely the kind of businesses that a private lender is looking for.
Cancer, it's already.
Banks won't touch any of these because, in most cases, they're not stable. They're not the type of products that they want to have on their books because of major repairs, the mixed use, and those are very unique. The zoning and all those things make those are not as good. Private lenders are willing to look at the underlying asset and the investor's ability to execute it because, again, timing and they know when they're going to be getting their money. That's what makes the private lender, where it's a bank, it's a whole different no. Quick closing, if you need a quick close, like your bidding, securing deals, like with rapid closing at a competitive advantage, essentially for auctions, purchases, distressed properties, uh, uh, in any time sensitive scenario, you're able to close sometimes in days as opposed instead of weeks, and that's to your competitive advantage. Very quick close. That's very uh, positive for you. This puts you ahead of your competition and other investors who are looking for or waiting for a bank approval. Now, here's the critical question about what does private lending actually cost? You do want to look at this because this is one of those decisions that help you make whether you want to do that. So let's look at the numbers and we're going to decode those numbers. First thing, we're going to be talking about interest rates. This is where many investors get confused. Private lending has its own language, and if you don't understand it, you can be actually evaluating on a deal that makes sense. So let's break down the four parameters that you need to understand. First, we're going to talk about interest rate. Private lending rates typically range from 8 to 15%, depending on the lender and the deal and the market conditions. This is uh, just a higher than bank. They're higher than bank rates, which generally usually between 3 and 6%, but they're the reason. And that reason is the convenience and the flexibility of underwriting and ease of underwriting. They're subject to not the same regulations as a bank. They're providing capital based strictly on the asset and your experience, not a 45-day underwriting process. That speed and flexibility comes with a cost. Now, here's the key. You need to factor this rate into your deal analyst. If your project profit is only 10% and you're paying 12%, the math don't work. But in doing that business. So walk away from a deal like that. Now, the second term we want to talk about is long terms. This is how long that you have the loan out. Typically, on a fix and flip type property, you got anywhere from 6 months to 2 years. These are short term loans designed to align with investment timelines. Why so short? Because the lender wants to know exactly when they're getting their money back. For a fix and flip, that might be 12 months. For a bridge loan, it might be 6 months. The point is, you need a clear exit strategy, and the loan such match that timeline. If you're planning an 18-month renovation, don't take a 12-month loan. You'll be scrambling at the end. Building a buffer. Third point we want to talk about is points. Now, a point is 1% of the loan amount, which paid up front at the closing. Private lenders typically charge between 2 to 5 points. Let me give you an example. If you borrow $100,000 and the lender charge you 3 points, you'll pay $3,000 up front. That comes out of your 97, and we owe you the loan process. So you actually receive 100,000. Points are the lender's compensation for originating the loan and taking the risk. They are non-negotiable in most cases, and they're factored into your deal analysis. So when you look at your deal, make sure that you take that into account. Now, the fourth term is what is called loan to value. This is the ratio of a loan amount that's going to be lended. So again, let's use the example. Let's say you have a $100,000 property or project, and we'll loan somewhere typically between 65 and 75%. Already built in is some equity, and generally, as a rule, you are asked to come up with that type of money. So let's say again, just an example, on $100,000, you have a 70% loan to ratio. That property is worth 140,000, which is what we'll give you. The difference is what you come to the table with. So this is basically how we can take the risk. The 30% is your cushion, because if they default, foreclose, or sell the property, and the market drops 20%, they still have an equity. The conservative approach protects the lender, but it also means you need more of your own capital to win the deal. This is the trade-off for the speed and flexibility. So here's the bottom line. Understand what's going to be required of your deal, and make sure the numbers work for you. And if they don't work, then what you should do is walk away from that deal. Okay, what we want to do now, for those of you all who sat through this portion of the webinar, we're approaching toward the middle to the end. What we want to do is ask you if you received some uh, enlightenment and would like to offer a recorded video. No one will see you. All you have to do is press yes, and you'll go off screen, and your video will be announced, and then we'll use it in the upcoming. If it's no, thank you anyway. So now we look from the lender's perspective. How do they protect their investments? Now, how do the private lenders protect their investment? I want to shift perspective for the moment. To be a successful uh, borrower, you need to understand how lenders think. They're not trying to be difficult. They're just trying to protect their capital. And when they understand their perspective, you can structure better deals that lenders find would want to fund. First, we're talking about asset base. The loan is primarily secured by the real estate itself, providing a tangible asset as collateral with measurable value. Second is first lien position. Lenders typically require the first lien position, giving them the priority or premier right when the property is sold or defaulted on that they get paid first. They don't want to be in a second position where they're at the whims of the first lender. They also use the appraisal or as after repair value analysis. What they basically do is take the as is property, factor in a conservative estimate of how much it'll be after the repairs have been applied, and then you understand what that personal loan would be. And then there the borrower's vetting. Through evaluation of your experience, your track record, and exit strategy, it just ensures them confidence in the deal. Typical ratios, like I said, is from 65 to 75% to maintain some type of uh, take into account market changes, time factors in getting equipment. You can do some risk mitigation strategy by combining asset security through due diligence, lending minimum exposure to yourself, have a verified exit strategy. If you're going to buy a property and you're going to refinance it, get pre-approval, and make sure at all times that all your documentations have been looked at by an attorney. So we want to definitely make sure that this is how you move forward. Again, all these are what you want to be conscious of is why the lender gives you speed and flexibility and want to make sure that this works. Most loans work on this on these premises, so you want to make sure as you evaluate everything and make sure that nothing goes wrong. If you have any questions, we want to hold those until the end. We will be answering those, and you'll be able to, again, take into account all the things that are going on and make sure that you understand the questions. So after you look at all these here items that we've talked about, this is when you come to the conclusion whether you want to move forward with this loan or not, and see that the lender and everything is everything that you are looking for, and that it's a great match both for you and for them. Now, this is what we want to do. We want to give you a plan. First, we want to talk about the high costs. We want to talk about the elephant in the room. The interest rates are high and points can erode profit. So let's just I'll give you a real world example because this is required. So if you're looking at a deal where you got 10 points plus 10% interest plus 3 points plus 2 points closing, and your profit margin is 30%, that is a deal you want to move forward to. Well, let's say you got 10 points of interest rates, 2 points for closing fees, and 3 points being charged to you. Now that's a deal you would want to walk away from. This is how you do it. You build in your contingency budget and buff it into the project timeline. Calculate all costs against projects, keeping the grass, insurance, utilities for keeping the place while you're doing the work. Another risk, short terms. As I said earlier, is usually between 6 months to 2 years. Sometimes material can't be getting, and I'll give you an example of that. A couple of years ago, when plywood was really, really scarce, it went up from $15 a sheet to $35, and it was still difficult to find plywood. So now you're on hold to get plywood for your floors, for your roofs, for those type of things. And so you need to have that delay into your timeline, and that does cut into your profit margins. The way to do that is have a pre-appro for refinancing option and make a strong marketing plan ready before the loan matures. Make sure you got a very uh, a and a B exit strategy. Those keep the timeline in place. If you're going to refinance, make sure you've taken that into account. Why it's rare with proper underwriting, defaults and foreclosure. Lenders may need to foreclose to recoup their investment if a deal falls. One way to do that is to ensure all loan documents are legal, sound, and compliant with state regulations, and work with an experienced legal counsel. So all our uh, uh, closings are done with a title attorney who specializes in real estate, and he makes sure that before you sign anything or before we release any monies, uh, for checks to be signed, that all documentations are understood, and that's part of your closing cost. Your title work is done so that you can title the house accordingly, and it's transferred into your name as the borrower, and that way you have all the legal obligations to either hold on to the property or refinance the property if it's necessary. So you do want to again commit all these things into your decision making, but there's always such a good opportunity. You want to keep that into your factor that into your life. For those of you who are seeing the situation, I want to ask that if you have a project, you have an investor who has a project, now is the time for you to hit the booking button. And that way you can contact me and we can talk about your prop project or property on an individual basis. Again, we'll give you another opportunity there toward the end. So now what we want to do is help you build a network that will work best for you. First of all, you want to attend some local real estate investments associations. In these, you have private lenders, you have wholesalers, you always have individuals who are looking for deals and who are funding deals and looking to buy deals. So basically, there's a uh, three-way networking. Also, you want to build your professional contacts, attorneys, CPAs, title companies. They also know private lenders. And in most cases, they did business with those lenders, so they did some vetting. And so if they refer someone, generally as a rule, it makes sense that that person has been successful and been professional. Uh, there is some online platforms that offer a marketplace for hard money lenders, but you do have to be cautious and vet them thoroughly. You want to make sure that when you're doing your vetting, you want to make sure that they have a proven track record. You want to see all their terms are transparent. You should receive a term sheet at the very beginning before you start any uh, other documentation like the 1003 package. You want to make sure that the lender is responsive and transparent at all times. And you also want to make sure that the terms are understood before you sign any documents obligating you to the loan. And you always want to, if possible, always bring your documentations to a legal counsel who can explain everything in detail before you decide to purchase anything. Again, what we're going to do is for you all who have some deals uh, that you want to receive some type of counseling on, we want to ask you to hit us at the booking link and give us an opportunity to work with you so that you can get your deals funded. Okay. Again, we want to talk about the different things in the private lending that you do want to do, and this is just a recap of the 4 things we talked about. You want to understand the strategy because private lending, they are fast and flexible, and you want to make sure you don't want to use them as a last result. It is a legal fact financial option, so you do want to use those as most sophisticated lenders do. You want to calculate all your costs, all in costs, your points, your interest, and all the fees against your profit margin. Ensure that that deal is going to work for you, and if it's not, be a smart investor and walk away from the deal. Third of all, you want to have a bulletproof exit. If you have a deal that's going to take you 18 months, get you an 18 to 24-month loan, there are some circumstances where we can get you extensions, but you don't want to go in having to be in a bind at the end. If your second B plan is make sure you're pre-approved to move that loan to a permanent loan. It's all possible, and then we want to encourage you to build relationship with private lending sources. One of the things about when you do a loan with a private lender, you want to continue to do, because now you all have a relationship, and you'll find that your loans are made quicker. They know you, they're comfortable with you, they've seen your work, and number one, you've seen their work. So definitely you want to make sure, again, that transpires. We're going to give you another opportunity if you have a deal, is to hit our booking link, book an appointment with us so that we can look at your deal, put you with our best source of funding, and you basically make sure that you can get your deal funded as quick as possible. Now we're going to go ahead on and reemphasize it's an opportunity for you if you have questions to raise your hand. And what we're going to be able to do is allow you to answer any questions. Do not see any hands up at this time. Well, we're going to wrap up, and we want to thank everyone who came out. We want to definitely make sure that if you have a commercial bridge loan, a ground up development project, need some no-doc funding, we are your people. Contact us again, and we look forward to working with you all on your next upcoming presentation.